GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate expert Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim, and happy Canada's birthday, because I won't talk to you again before then.
Ross, Genworth, Canada's alternative to CMHC, recently announced that 39% of first-time buyers are making more than their minimum yearly mortgage payments. It states they were paying down their mortgages faster than they were required to do. Is that a good decision, and who is giving them the advice to do that?
Great question. So what I would start the answer is with this. The second part of your question. Who's giving them this guidance, and why are they giving them this guidance? Now, I'll tell you, probably their parents and everybody else that they've talked to since the day they were born would be telling them that this was a good way to handle your home ownership. Pay down that mortgage as quickly as possible in case a housing market corrects or interest rates go up. But that's because the previous generation, the boomers, they owned their homes during the interest rate cycle where interest rates were falling. So when they took out their original mortgage on their property, they were sitting at anywhere from around about an 8 to as high as 23 to back down to somewhere around 11% mortgage rates for the very first mortgage that they took out. Who wants them? The author of the survey actually is one of the parties that want them to pay down, do early prepayment or pay down their mortgage debt quicker. A company like Genworth or CMHC, who an innocent first-time buyer pays for mortgage default insurance, which only protects the bank. It does not protect the buyer who has to pay the insurance. They're the ones who benefit. So the quicker that mortgage debt as a percentage of the original purchase price gets paid down, the quicker CMHC and Genworth are off the hook. The banks, in turn, are also off the hook quicker. What a bank loves is to have someone with about 30% equity in their house and with a 5-year mortgage locked in with that bank, and with a housing market that begins to correct at the same time that interest rates possibly could be going up. Because that sets up an environment for the bank to control the client. So these early prepayments, that's why, there are decades of comments like this that appeared everywhere you can read about paying down your mortgage debt. Now, when mortgage debt is 23 or 11% or even 8%, paying down your mortgage debt is a very rational and savvy way to own a home. But when interest rates, 5-year term mortgage rates, are at 2.4%, that really is not the best strategy to enact. Now, there is a certain segment of the market, first-time buyers, who are forced to do that. But there is no need for them to accelerate their payments. If they have any additional cash aside, what they should have been doing is putting those funds into the only other tax-free savings account that's possible in Canada today, the TFSA. They should be taking, instead of putting an extra $5,000 down in their mortgage, they should be putting that $5,000 into a TFSA, contacting a financial advisor, getting it set up in some kind of a risk environment that they're going to be comfortable with, and they should allow that money to grow over the next 50 years, the same time that they're going to own a home. We have strategies that we have in place for our members where they have this type of recommendation, but you don't hear it anywhere else. You hear just the opposite. Pay down your mortgage as quickly as possible. I'm telling you right now, for probably 65% of all homeowners out there that have a mortgage, that really is not the best advice.
So these people who are making the early payments, is that a bad move on their part?
Well, in 65% of the cases, I'm going to say that, or more, that is not the best move. Now, the reason they do it is because there has been, up until now, no way for an independent, unbiased view of where a home's value is headed. So the risk of falling house prices or the risk of a correcting market, and then people saying, oh, well, I won't be able to renew my mortgage because my equity is going to be too low. It also means that they haven't stepped back and looked at their amortization chart and see how quickly debt is being paid down right now. Although you were paying down a lower percentage of your debt, the dollar volume of your debt being paid down on a mortgage today in 2017 is massively more huge. I'm going to use double words there than it was in 1990 when housing prices were low. One of the factors that we look at, what I'm trying to say is that you need to look at the interest payable on your mortgage debt. Don't worry about the principal payable. Principal payable is money that's going into your own pocket. Don't worry about it. We say, if someone wants to guarantee to be a millionaire today, so if you're 30 years old and you want to guarantee that you're going to be a millionaire by the time you're 75, or 65 for that matter, or 60 or 55 for that matter, it's to go out and purchase $1 million home. Leverage it to the hilt when you buy it. Just go ahead and buy it. As long as you make that mortgage payment over the next 25 years, even if your house does not increase a nickel over the next 25 years, you'll be a millionaire. There is no other financial vehicle out there today like residential real estate that you live in. There is nothing out there. It is tax-free. So you can have all these strategies about RRSPs other than a TFSA where you take after-tax dollars, invest it, and you never are going to pay tax on that. Your house is the only other vehicle where that's possible. The only difference with a house is there is no limit. Now, we may have government intervention in the coming years, but I think what you're going to find is a house price correction makes governments mute about housing. So if that is taking place in Ontario, which, that's possible. We know what's going on. I'm not going to state any further. It's already ongoing in British Columbia. For those out there who think it's not, the data does not support your viewpoint. That's the reality. So you want to become a millionaire, purchase $1 million home, pay it off, and the day it's paid off, as long as you're going to own it for the next 20, 25 years, you'll be a minimum millionaire.
We'll have more with Ross Kay right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, Toronto newspapers are reporting a wide range of changes to the Greater Toronto housing market, with just as many reasons why those changes are being claimed. In one day, one media outlet reported new builders were claiming condo sales had dropped massively, while another media outlet claimed brand new townhome sales remained unchanged. What's the real story, and why is there such a wide range of what we're being told?
Okay, good question again. So what you're looking at there is, I've said on your show before to your listeners, we break a market down into its subsets. So in terms of the buyer side, in terms of what buyers are buying, we have 5 different categories of homes that they purchase. These categories, generally speaking, are based on price. It has nothing to do with the style of house. It's price, because that's how buyers interact with the real estate. It's why we tell you that the average selling price reported by real estate boards, the benchmark price, the HPI, all they're reflecting is the buyer's side of a transaction. They have nothing to do with a home's price. That being said, when we're talking about the market, these people, the analysts and the economists who are out there in the press right now, making all of these different assumptions about the market, guesses, opinions, they don't have the data behind them to support what they're saying. So they just have to come up with an off the cuff or an old economist. We call myths in economics, our firm, economists, to support their answer. When you're talking about townhomes, you're talking about, in the GTA, you're talking generally about a second or third time purchase. So this is someone who has already purchased a condominium or 2 condominiums and now is moving into a townhome, especially as you get closer and closer to Toronto and the GTA. So of course, those people are still out there buying right now because the market cycle, where it is right now, they still have the ability to buy. Condominiums on the other side, condominium apartments on the other side, the interest rate bump from November of last year. So in other words, back in October, interest rates had bottomed, and between October and January, interest rates went up about 1/4 of a point. That 1/4 of a point today is enough to stop people, first-time buyers, from being able to buy. Trade-up buyers can still spend $500,000. They just spend, get a little bit less house for their $500 that they spend. First-time buyers can't still spend the same amount of money. When interest rates go up on a 95 to 5% leverage with debt to equity, any kind of interest rate fluctuation at all eliminates buyers from the market. This is why, when we follow the trading cycle, we understand where the price pressure is going to be at any particular moment in time. We're able to forecast going forward. It's also why we're able to count the number of buyers out in the market that have sold their current house and that they haven't purchased another one yet. So we use that as our buyer demand. When you use that calculation, you have the answers to these questions like, why are townhouses selling and why are condominium apartment sales falling off? It's just the reverse out in British Columbia, where you're still recording condo sales, but you're not recording the sales of the larger detached homes. And these different market consequences, the consequences of these different differentials in the market from British Columbia to the GTA, or from one part of the GTA to another, from one housing type to another housing type, in the way that we calculate housing types. All of these things have an impact on all of the homeowners in that marketplace, because the property values on each category of home in each different area is under different price pressures. So that's why you're getting these different stories. One economist analysis gives one story, another economist, another analysis gives another, and what we've got now are realtors all of a sudden guessing that they know how to talk about, explain how a housing market is trending. Without the data, all of these comments are useless. Without being able to read the data, all these comments are useless. Without understanding the trading cycle, without understanding the realty cycle, without knowing how the interest rate cycle comes into play, all of those comments are useless. And that's why you've got this confusion.
We'll have more with Ross Kay right after this.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, we're only 1 week until BC Assessment records home record prices to be used for property tax assessments for 2018 across BC. What can homeowners expect when they get that envelope?
Wow, you set me up with a great question here today, Jim. And the irony here is the last question that I answered has some bearing here. So, you know, people need to understand how all of this fake house price news, this fake house price intelligence, these fake housing stories affect them in their real life. And you're going to see that in British Columbia. Because remember last year at this time, we're almost time that we're going to start talking about a foreign buyer tax that came into effect in July. But at this time last year, everybody was complaining about foreign buyers. We did our money exchange, our currency exchange Ponzi scheme report last year, just before this, explaining what now a year later, all of a sudden, last weekend in the Vancouver Sun, you're seeing was proven true. The same way that it was proven true when you had your foreign buyer numbers. Property tax assessments, because they believe in seasonally adjusted numbers, they believe in the property tax assessment methodology. It means that individual homeowners are either going to be harmed or benefit because of those flaws. Last year, who benefited were the owners of lower-priced homes. So because the activity in the ultra-luxury class was taking place last year, and you were hearing crazy comments about 60% year-over-year gain in some ultra-luxury class homes, what happens with the assessment methodology is all the homes of that type in that area are impacted by the 2 or 3 homes that will sell. Let's see the dozen homes that sell. So there's a couple hundred homes, a dozen sell, everybody's taxes go up. So last year, the ultra-luxury class property owners, people who own properties over $2 million in Vancouver, I'm not going to tell you the exact number, but it's about $2 million, those people saw their property taxes increase way more. Their assessments increase, so their property tax is disproportionately, their assessments increase, which causes a disproportionate share of the property tax for the whole province or city to be labeled on those homeowners. So the people in the lower priced homes benefited. So now what we have is just the opposite is going to happen. All of those foreign buyers who purchased homes that the provincial government recorded and told you in the numbers, because they're still posted on their website, how many people foreign buyers purchased homes, their property taxes disproportionately are going to drop. While the people who have been purchasing condos, the Canadian buyers, those first-time buyers, generation squeeze out your way. Real Vancouverites who are Canadians living in Vancouver, the people who are buying their first-time homes, their property taxes are disproportionately going to increase. In other words, once again, foreign buyers in British Columbia are going to get a property tax benefit paid for by Canadian homeowners. Those Canadian homeowners generally who had to leverage themselves the highest just to get into the market. This is why government's making these policies without understanding how a market evolves, how the trading cycle works, how the realty cycle works, what impacts impact real property prices. Making policy only harm those who need the policy the most. Your property tax assessment right now is going to be the exact same way. By the time you get announced next January 2018, the new assessments are rolling out based on July the 1st, 2017 assessments. Foreign buyers who purchased ultra-luxury class homes are going to be the beneficiary. Those first-time buyers that we hear are still foolish enough to enter bidding wars in Vancouver, they're the ones who are going to pay the price.
If you're saying foreign owners of Vancouver detached ultra-luxury homes are going to get a discount on property taxes, are you saying now the Canadian owners of lower-priced homes are going to have to make up the shortfall?
Yeah, that's exactly what I'm saying. That's the way that these policies work, because they're not designed, the policy itself is not designed with how the housing market functions. The home trading market is what we call it. How the home trading market functions and how prices evolve over the course of a trading cycle. So because they have, this doesn't appear in any textbook. I mean, your listeners have to understand this. What I'm telling you here does not appear in a post-secondary real estate textbook, although my 80-year-old parents know it's just simply a fact of every housing market. Because they don't know this, they set policies that don't protect people or that use a flawed property tax assessment model, which gets updated every year. It's simply ludicrous that they would set it up that way in the first place. And it's even more ludicrous that they would set a policy that is going to be impacted, that the policy itself is going to cause more problems in the assessment. If people wonder, the property taxes go up this year. So if you bought a condominium townhouse last year and your assessment comes out next year, who you need to blame, fair and square, are the BC Liberals. They were in power when they brought the foreign buyer tax in. Because they brought in a foreign buyer tax at the wrong time, in the wrong way, not covering the right items, the consequence of that bad policy is that you're going to have higher taxes payable for the lowest price category of homes that have been selling. Their taxes are going to increase. At the same time that those ultra-luxury class homes see their property taxes decrease. It is the BC Liberals' fault that this happened. I don't care what side of the political spectrum you come from. Because all parties, in all fairness, all parties, none of them have a sound housing policy, a sound property tax policy. There are no sound policies out there because they're all based on a flawed methodology that has been perpetuated by organized real estate for the last 40 years so real estate agents can earn commission. It's as simple as that.
The Toronto Real Estate Board says that up to 30% of Toronto homeowners will list their property this year. Is that true?
A fantastic question. Again, I just love these headline questions. Let your listeners sit back and think about this. If there's 10 houses on the street, 3 of them are going to have for sale signs on them. What was it? What did you say, 30%? Is that what you said?
That's what the Toronto Real Estate Board said, yes.
Right. That's what organized, the single largest real estate association in Canada, possibly in North America, the Toronto Real Estate Board sent out a false, deceptive, misleading, absurd comment that was picked up by every newspaper in the GTA. And it sounds like they picked them out nationwide. If you saw 30% of the housing stock listed for sale, you would have well, I'm already saying that you're going to have the single largest housing correction ever recorded, but the speed, the volatility, the magnitude of a house price correction. If 30% of the housing stock was listed for sale, is unimaginable. Now, what we know is that is another myth being used by organized real estate because it's been used decades before. This exact same story came back in the 1990s, and they use these stories to manipulate the public's opinion of real estate agents. In other words, for the last 13 years, they filled everybody with a false story that housing prices were going to rise forever, and it had nothing to do with interest rates. They told you that Vancouver is a world-class city. Toronto is a world-class city. It's different than everywhere else in the world because these cities are unique. There's geographic constraints. There's land zoning constraints. Immigration is coming in. What I'll tell you is, over a 25-year period, a 10 to 25-year period, those variables do impact the housing market. But they do not impact them on a shorter window. Homeowners themselves are the ones who impact the market. So I know that you will not see 30% of the houses come for sale. That is impossible. It isn't going to happen. What the survey said was, please forgive us for the last 13 years of lying to you about housing prices going to go up, and now blame it on the theory that 30% of existing homeowners are going to put their house in the market, driving housing prices down. It's not our fault, Treb says. They're putting the blame over to existing homeowners who list their house. And that gives their realtor members the advantage to go on the doors, knock on the doors, and say, would you like to list your home now before it drops in price tomorrow? The same way that they encourage them to do the opposite for the last 13 years. This is how organized real estate goes. They don't have any statistics, any metric, any numbers. They do not have decades of correlation between their metrics and the reality of the market. It's why the single easiest one that metric used by economists, organized real estate, everyone else, the new sales to listings ratio, has no data to support it. CMHC does not have it. Economists don't have it. It does not appear in any textbook. It does not appear in any academic study. You cannot find proof that that metric is legitimate, that there's a correlation between new listings to sales ratio. Yet it's used. That is a massive problem because it means the public has been misled, deceived, and misrepresented. That's what we're talking about here when we're talking about 30% of homeowners listing their home for sale. It is a myth used to control the public, offset blame, and for realtors to earn commission.
Ross, thank you so much for chatting with us.
Hey, thanks a lot, Jim. I really appreciate having me back on.
My guest has been real estate expert Ross Kay from thewealthyhomeowner.ca. And Ross, happy Canada Day.
And same to you, Jim, and all your listeners.
You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show, including our guests like Ross, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.